Stocks close mixed on Wall Street as Treasury yields spike for the second straight day. The Dow gains after correcting for 10 straight sessions in its longest losing streak since 1974. The S&P 500 and the Nasdaq correct for the second straight day. Asian markets trade mixed as China keeps loan prime rates unchanged at 3.1%. The GIFT Nifty is also suggesting a lower start for the Indian market. Gold prices edge higher to recover from a one-month low. Crude prices fall below $73 a barrel on expectation of weak demand in 2025. Accenture reports a 9% quarterly revenue growth, beating estimates, raises growth guidance for the full year from 3 to 6% range earlier to 4 to 7% range. Infosys and Wipro ADR rise around 3% each. GST Council are likely to discuss the possibility of bringing aviation fuel under its ambit. Sources say that GST secretariats believe bringing ATF under GST will reduce cascading of taxes. The council will meet on 21st of December in Jaisalmer. Hello, good morning. You've tuned into CNBC TV 18. You're watching Power Breakfast, and I'm Vinny Motiwala from the Mumbai News Centre. Today, the market's a bit better than what we saw coming in yesterday. Asian markets opening is a bit mixed. There are some sectors and some countries where the indices are trading in the green. So Hang Seng managing to hold on to some bit of a green today in trade. We are seeing Nikkei that's holding on to the green. On the other side, we are seeing ASX 200, Kospi, Taiwan Index. All of them on the flip side are trading in the red. Shanghai, a bit of a muted start that we're seeing coming in for the Shanghai markets. Now, what's the indication for the Indian markets from all this handover that we have from US as well as the Asian markets? Bit of a muted start is what we could watch out for, because as of now, the Nifty implied open, that's indicating a downtick of around 80 points is what we're watching out for. So 86 points is the decline that we're seeing for the Nifty implied open. So let's expect a bit of a red start only coming in for the markets. Maybe let's see if it recovers then during the day. But at the start, we could see a bit of a red on the screen, even for the Indian markets. Not much of an excitement there. Like I was saying, Asia is mixed, but US also, what we saw on Wall Street, that ended mixed as well. And this comes in after the Federal Reserve has revised its rate outlook for 2025. Now, Dow Jones, that snapped its 10-day losing streak with a 15-point gain in yesterday's trading session, while S&P 500 lost 5 points and a tech-heavy Nasdaq that shed almost 19 points in trade. On the economic calendar, the US economy is in the third quarter grew by around 3.11%, which is while the initial claims for unemployment totaled to around 220,000, a decline of 22,000 from the previous period. Now, CNBC's Rick Santelli is getting us more details on what happened on Wall Street.
GDP, our last look on the third quarter, coming in much better than expected, 3.1% versus 2.8%. That definitely means it now moves to the best level since the last quarter of last year when it was 3.2%. If we look at consumption, it also ramped up from 3.5 to 3.7. That's the best consumption rate since the first quarter of 23. The pricing index holding steady at 1.9%. And if we look at the personal consumption expenditure, quarter over quarter on that pricing index, 1/10 warmer than expected, 1/10 warmer in the rearview mirror at 2.2. That would be the warmest since 2.8 in the second quarter of this year. Now, let's look at initial claims. 220,000, less than we were looking for, 22,000 less than our last look, which at this point, 242,000 is still unrevised. 220 would be the lightest since the third week of November of this year. And finally, number 28 in a row above 1.8 million, 1,874,000.
And on the back of Federal Reserve's latest policy decision, the former Fed Vice Chair and Global Economic Advisor at PIMCO, Richard Clarida, commented on Fed's recalibration on the future cuts. Listen in.
I think the risks to inflation are to the upside, and I think the committee and the chair acknowledged that yesterday. I think the case for cuts going into September was the data was cooperating and they felt the policy was restrictive. I think the case for a cut yesterday was a close call. Indeed, we had President Hammack dissenting, and we had the unusual situation, Joe, where three other officials, presumably presidents, also indicated that they didn't support the cut through their dots. So I think it was a close call. I do welcome the fact that the committee, this first phase of recalibration appears to be over, and they're now really talking, and I believe them, that they're going to be very data dependent about the timing and extent of future cuts, and I applaud that.
That's all about the US markets, but let's get to the final update on our global market wrap and talk about the European markets. They suffered their worst session in 5 weeks following the Fed's rate cut outlook for 2025. Now, meanwhile, when you look at it, Bank of England left its rate unchanged at 4.75%, and the French CAC slipped almost 90 points. What you saw coming in from the German DAX that shed around 272 points, and the British FTSE ended 93 points lower in trade yesterday. European stock 600 index that closed 1.51% down, notching its worst session since November 12th, with all sectors and major bourses in the negative territory. So that's the wrap that we have in terms of the global market action. But how will all this impact our Indian markets? We have a team of research joining in with us to set you up for today's trading session. Hormaz as well as Sudarshan. Good morning, guys, and thank you so much as always for joining in with us early in the morning. Hormaz, good morning. What are we watching out for in today's trade setup? Any respite from yesterday's fall? Muted?
Good morning, Vinny. And the GIFT Nifty is not suggesting so as of now, but you know how last Friday turned out to be, right? After that sharp fall, we had a very, very swift recovery. So the bulls would definitely be anticipating something like that. But yes, of course, it was yesterday's trading session. It was a gap down, yes, but then that is where the fall stopped. Now, what if you see the glass half full, you'd say that it was not as bad as it could have been, right? Because then you just traded in a 50-point band between 23,950 and 24,000 all through the trading session. But now the Nifty is down 900 points from the recent swing high of 24,857 that it had made. And it was the expiry yesterday, but there were no sharp swings seen in yesterday's trading session either. And compared to the Nifty Bank, that is now down almost 2,000 points in the last three trading sessions. Now, the solace here is that the broader markets did slightly better. The mid-cap index recovered from the lows of the day, as did the small-cap index. And the only sectoral index that held out in yesterday's session was the Nifty Pharma. And the pharma stocks continued to outperform in yesterday's session. And despite the market texture being in the negative, there were certain shares that did very well, that ended at record highs, say for the likes of BSE, Oracle Financial, KFin Technologies, and there were a lot of other such names as well. For the week, the Nifty is down 3%, the Nifty Bank down a similar quantum as well. It'll be interesting to see how it moves. Watch out for IT stocks today, of course, after Accenture's results. Both the Wipro and Infosys ADR ended with gains of up to 4%. 3 more IPOs open for subscription today, so there are 8 companies now that are vying for investor interest at the same time. And of course, watch out for the US PCE data later this evening. But for now, it's yet another negative start is what the GIFT Nifty is implying for our own markets.
Okay, Hormaz, thank you so much for that. And as of now, Nifty implied open down 93 points. Let's move on to important stocks that you should be keeping on your radar this morning. IT stocks, keeping an eye on that. Accenture has reported a good set of numbers in Q1 up to their guidance. So we could expect some bit of a positive move coming in for IT stocks today. Bharti Airtel, that's the next one to keep on your radar. They've cleared all their dues for 2016 Spectrum and they've prepaid 3,626 crores. Do not forget, Bharti Airtel had prepaid almost a total of 28,320 crores of spectrum liabilities in 2024, the calendar year that we are looking out for. Now, Exide Industries and Hyundai Motor, that's also going to be in focus after they have signed an agreement for production and supply of battery cells for Hyundai's EV segment. So keep an eye out on that. Amara Raja and Hyundai Motors also are in focus because the Hyundai is to equip its domestic product lineup with Amaron's AGM battery technology. Now, what does AGM stand for? It's absorbent glass mat. So keep an eye out on both these stocks as well. KPI Green signed an MOU with Rajasthan government. This is to develop hybrid, solar and wind power projects in Jaisalmer. G Vernova, that's also in focus. They've won an order of around 400 crores from Sterlite Grid, 32 for supply and supervision of high voltage equipment. BASF, that's also in focus. Board has given an in-principle approval nod for a demerger of its agriculture solution business into a separate listed entity. Important stocks to watch out for there. But finally, let's not forget, we have to talk about what's going to be happening in the world of F&Os. How is that going to be shaping up? Sudarshan is joining in with us. Good morning, Sudarshan.
Good morning, Vinny. So data remains unsupportive, but talking first about yesterday's session, after opening with major cuts, we managed to hold on to those levels, and at the end, Nifty and Sensex underperformed and closed with cuts of more than 1%, while mid-cap index closed in the red, but relatively outperformed. And for today, GIFT Nifty indicates another day of weak start. It's down almost 90 points. But talking first about the flows, FIs yesterday sold more than rupees 4,000 crore, but it was offset by DIs, which bought almost rupees 4,000 crore. In the futures market, FI sell figure was more than 1,500 crore, and they have reduced long position by 3,000 contracts. They have added short positions by 7,000 contracts, and their long exposure now reduced to 32%, which is lowest that we have seen in the last 1 month. While on the client side, exposure remains healthy, and it's around 64.5%. On the option front, on the call side, 24,000 call and 24,200 call have seen healthy additions, while on the put side, 24,000 put has seen addition of almost 15 lakh shares, and here premium is 195. Now support for Nifty is 23,820, that is also 200 daily moving average, and resistance is now 24,250. So overall, 7 stocks are in the band, and three stocks have come out of the band, and those are Chambal Fertilizer, RBL Bank, and Nalco.
Okay, Sudarshan, thank you so much for the latest update coming in the world of F&Os and what you should be keeping an eye out on today. On that note, it's time that we slip into a very short break, but don't go anywhere, because after the break, we'll bring you the latest in terms of the GST Council that is likely to deliberate on the possibility of bringing aviation fuel under its ambit. So don't go anywhere, we'll get you more exclusive on that front. Welcome back. You're tuned into Power Breakfast on CNBC TV 18. Now, sources tell CNBC TV 18 that the GST Council is likely to discuss the possibility of bringing aviation turbine fuel under the GST regime. Tim C is joining in with us with the latest update on this one, because the all-important meet is going to be tomorrow. Tim C, good morning. More additions coming in and more expectations here from this GST Council meet.
Well, yes, more additions and more expectations, and a really big task that is right here as an agenda item. What sources indicate is that the council could discuss the possibility as to whether ATF should be part of GST or not. Remember, right now, there's no rate that has been proposed by the Council Secretariat as part of the agenda against ATF. ATF currently is 0 rated. We all know that constitutional amendment bill to get GST into the new system, that is this indirect tax system. It said that petroleum and petroleum products can be brought in as and when deemed fit by the GST Council with a rate. But yes, they are keeping it as 0 rated. Now, for the first time in the recent past, we are seeing that ATF has been considered as an agenda item where the Secretariat is of a view that Council should see whether it should be brought under GST or status quo should be maintained. So a view may be taken is what I quote the agenda. A view may be taken is what sources say. And let's see, because a detailed reasoning has been given that ATF is just like kerosene oil. It has a lot of inputs on which manufacturers are unable to take input tax credit. It adds to the operating cost, high rates, high taxes because of VAT and state duties. It adds to high operating cost also for aviation sector and also for refiners. There's a lot of cascading duties. So let's see whether Council takes a view, and if they take a view in favor of getting it under GST, then the discussion will begin as to what should be a rate attached to this commodity.
Okay, Tim C, thank you so much for the latest update coming in there. Let's move on. And the e-commerce giant Flipkart is preparing for a much-anticipated IPO. Now, sources tell CNBC TV 18 that Flipkart's board has approved relocating its domicile from Singapore to India. A strategic decision. This is going to be to simplify the regulatory as well as operational processes. Now, according to the sources, the IPO is expected to take place and come out within 12 to 18 months, and the company is positioning itself to bring one of the largest IPOs in Indian history. By relocating, the company will avoid the complexities of India's stringent FEMA and FDI regulations. Being domiciled in India also eliminates dual oversight from both Singapore as well as the Indian authorities, paving way for a smoother operation and IPO-related processes. So, interesting one to watch out for. Let's see where this goes in the next 12 to 18 months. On that note, it's time that we sip into a very short break. Don't go anywhere, because after the break, we'll bring you what's happening in the world of commodities. So, stay tuned in. Thanks for staying tuned into Power Breakfast on CNBC TV 18. It's time we get to what's the latest update coming in the world of commodities, and we have Manisha Gupta joining in with us as always. Manisha, good morning. What are we watching out for today in the world of commodities? Crude, anything exciting there?
Oh, well, you know what, Vinny? Almost all these commodities seem to be headed for a weekly decline. The strength in US dollar, the US Fed meeting clearly seems to have done that damage. If you look at the crude oil prices, well, overnight markets have yet again seen some decline. There are anyways concerns about more supply from non-OPEC. We also have seen Sinopec, which is the largest Chinese refiner, saying that perhaps the Chinese demand for gasoline has peaked already in 2023. That yet again weighed onto the prices. But not just crude. When you look at the metal prices, we've seen copper decline 2% overnight yet again. Silver was down by 1%. We have nickel prices now trading at a 4-year lows, and it is a 1-month lows continuing in case of copper. It also is a sharp decline that we've seen in zinc and aluminum overnight. The only thing that I see green on my charts right now is natural gas prices trading at a 13-month lows. We've seen around 12% of gains in the last 1 month. That is because natural gas is cyclical. It is winter demand coming in strong for natural gas. But apart from that, everything else trading in the negative and headed for a weekly sense as well.
Okay, Manisha, thank you so much for the update in the world of commodities. But on that note, we're absolutely out of time on this edition of Power Breakfast on CNBC TV 18. Thank you so much for tuning in. Up next, we're Bazaar Morning Call.